Welcome to the Income Flip Podcast. Today, I've got Pasha Esfandiary with me from Evoke Capital. Pasha, thanks so much for joining us today.
I appreciate being here. This is going to be fun.
Awesome, brother. Awesome. Well, listen, I want to learn a little bit about your journey. We love to unpack here the journey of the entrepreneur, right? This podcast is all about helping people convert their active income into passive income. And on that journey, it's full of like pitfalls and wins and losses. And so I love to kind of learn from you what that journey looks like. But before we get started, I hear you're a poker player.
Yeah. Yes, I am. I definitely went a different route than traditionally. I didn't go to college. Quickly dropped out of college and quickly thereafter got into poker. Only because my brother at that time, this is about 2004, my brother won a big poker tournament right as it started getting really big. This is before Chris Moneymaker and bringing everyone into it. And so he won a big tournament. And I said, well, if he could do it, I mean, he won 1.4 million. And I said,
Wow.
if he could do it, and he started getting some notoriety, I could do it, And I've always been a gamer. I played a lot of video games when I was younger, and I picked it up pretty damn quickly. And it was just too good for me, being a young kid, making more money than I thought I would be, and then it got really big, and then everyone just played really, really bad. And so professionally, I played from 21 till about 26. And I always played here and there to supplement my income as well.
Okay. So from 2001 to 2006, is what you're saying?
No,
No,
about 2006 till 2011
oh,
range.
2006 to,
Yeah,
okay.
around that range, yeah.
Okay, 2006 to 2011. And 2011 is when you got into real estate full time. Is that
That's
correct?
correct. So
Okay.
2011 was when I first bought my first home, which actually happened to be a mobile home in a mobile home park community, and I flipped it. I bought it from the auction sight unseen, and that was my first flip. That was my
Okay.
first foray into real estate myself professionally.
So let's talk a little bit about that. I mean, the life of a poker player. There's I want to understand and unpack. Like, what did you learn? What did gaming teach you? What are the
Uh,
what are the strategies that you learned that you were able to transfer over and maybe even have the confidence to play the real
yeah.
estate investing game?
Oh man, there's a lot. I'm actually writing a book. It'll probably be out in a year or so about all my lessons that I've learned from poker that I've translated into my real life and into investing. But there are some things that really stand out. One is in poker, your basis of everything you do is education. You always are consistently having to get better and reevaluate your progress and your results. And the difference between short-term results and long-term results, aka variance. And so also secondly, you have to go by the math and you have to go by the numbers, which has taught me a conservative base of I never will go past my numbers, especially in the auction world when I first started. And then thirdly, it's called game selection. I think not enough people think about game selection and gamifying what you choose to go after. And it's because of game selection that started me out first in flipping homes, then development in LA, then apartment complexes, and now mobile home parks.
So unpack what you mean by game selection. Like which game you're going to play. Like
Yeah.
like what it looks like at the end. Like where does this path actually lead me? Help us unpack that a little bit.
Okay. For example, when I was playing poker professionally, there's two different types of poker players, or really anybody. And what I always found odd to me is that other pros would want to go pay with the best poker pros. They just wanted to see how good they were and play against them to see if they could win money and compete with them. I, in my opinion, never wanted to do that. I didn't care. I just wanted to go and find the worst players in the worst game or in the best game possible that I can make the most money. So there's really a big duality. My brother became very famous from poker, and I always just stayed in the shadows and just played underground poker games. And I would travel around the world and play only the cash games and not the tournaments. Obviously, I played all the big tournaments many times, but I didn't enjoy it. So game selection to me is finding what you're good at, what you like, and how do you, it's essentially your niche, and how do you keep exposing it to your favor the most, right?
Got it.
That
Protecting
is
your downside, increasing your upside. This is like a page right out of Rounders, right? Is that-
that's exactly right. You know, I always want to play the underground games with the worst players, and that's essentially how I built my career as a poker player. Yeah.
Well, how did you get into the wonderful world of real estate investing? Then, how did that transition happen?
You know, I think innately as a child, it was just ingrained into me. I just always remember very vividly my father. We migrated here from Iran, and we had nothing. And he would always just say, "Man, I should have bought that house. It's worth, this much. Man, I wish I did that. That land was worth this much. Like real estate, real estate, real estate." I just remember being 17 years old, and before I even knew what a vision board was or writing down your goals, I had a whiteboard, and I just said, "I'm going to own 5 homes one day." And that was my goal, because I had rented out a room from a house from a real estate agent who converted his houses into having, it would be like a 4-bedroom house, and he'd make it into a 7-bedroom house and just rent rooms. I said, "Man, this is genius." And so I had the itch ever since I was young. And when I got into real poker, I always knew it was a means to an end. And so when I turned 26 and I moved from Texas to Vegas, I quickly realized when I was living in Vegas, I said, I don't want this lifestyle anymore. I did very well at poker for my age, but I also knew that I was hitting my ceiling. I wanted to stop educating myself as much. I wanted to stop practicing as much. Like when you're young and you have a lot of energy, you could do almost anything. And as I think you get a little bit older, you're like, is this what I want to put my energy into? And I just knew it wasn't. So I went and did an internship for somebody out in LA, he's a family friend of ours, and just unpaid internship for 3 months to learn everything about real estate. And so once I got back, I essentially took my bankroll and went and bought my first home with that education that I had on the internship.
That's awesome. What kind of internship was it? I'm just curious. What did they have you do?
They had me doing comps left and right, just comps. And then he broke it down in 3 different buckets about single family residences, and then he had me go to the LA auctions and the trustee sales just to get a feel for how everything was going. So he had me from step 1 to 10 do all the processes with them.
I love that. That's awesome.
It was amazing. Yeah, it was incredible.
Yeah, just the learning that takes place there. So you started then at the auction game.
That's correct.
That was the game that you played. So
yeah.
you went back and you said, okay, I feel comfortable. And where was it that you started in the auction? Like you were probably seeing LA prices, and then you went to some other submarket.
Yeah, that's
right?
correct.
This shit is really cheap compared to LA, right?
Yeah. I went from LA. I went back to Las Vegas, and I started buying from the auctions there. Right.
Okay.
And I remember it took me a really long time to buy my first home too. From how many I was bidding every single day, I was bidding, Monday through Friday, about 20 to 25 homes that I would underwrite and put into my pro forma that I made. And it took me about 6 months to buy the first mobile home. Okay. Because I was just so conservative. I just said, I just can't lose money on this first one. And I had time on my side as well too. And so it took me about 6 months, but that initial entry into the auction and with my training has taught me the foundation of my real estate training and how I approach real estate now, which is just stick to your numbers, build cushion everywhere in the pro forma, and be patient and find the right deal.
Well, unpack for us a little bit about what your business looks like today. So your first was you purchased a mobile home with the intent of flipping that mobile home.
Yes.
Right. Did you make money on that first one?
I did $3,000 net before taxes.
Okay. Okay, you made money. And then where is that taking you today? Like, what does your business look like today?
Yeah. So let's fast forward about 13 years now. 2 years ago, I started Evoke Capital. It wasn't out of this idea that we were going to start a business, me and my partners. It's just we were buying properties on our own and not flipping them, repositioning them and refining out of them. We essentially ran out of money, and we just wanted to continue this. And there's an opportunity here in mobile home communities, in my opinion, that won't be around for 5 to 7 years. Right now, our company owns and also operates and manages over 2,100 lots. We're about to close on our biggest deal here in about 2 weeks, and yeah, it's pretty fantastic. We grew pretty quickly.
I was going to ask you, like that's fast, right?
That's fast.
So you went from buying one single one to then buying probably, you know, multiple at a time, hundreds at a
Yes.
time, I would imagine.
That's correct. Yeah, we bought our first 23 lot park. We were able to essentially 1031 that out in about a year and a half, and we had bought some other ones along the way. And then we found it was just a really amazing deal, and we didn't have the essentially the money to buy it, so we just said let's do our first syndication. That one, we found one right after that. We ended up doing 4 syndications very quickly.
Wow.
We just said, hey, we should start a fund, because that's just what I love about entrepreneurship and business creation is that I always feel like you have to grow into your problems. You grow, and then I have a problem. How do we solve this problem? And how do we do that? And then once we solve that problem, another problem will arise, but it keeps rolling the ball forward. And now we're, just opening fund 2, and have over 20 plus properties, and investors and the whole thing. So
Are you
it's a whole
buying them?
business.
Are you buying them all over the country, or like where are you targeting primarily?
Primarily is the Midwest and Mid-South. Our primary markets is Texas, Georgia, and Alabama, but we're in 10 different states right now. We don't touch California, New York. Really, at the end of the day, we buy in red states that are landlord-friendly laws. Yeah.
Okay, so talking about problems, because we grow through problems, right? You talk about Ray Dalio, and he just kind of talks about this growth, this loop that happens, and you hit a ceiling, you fall down, you
Yep.
then loop back up. What are some of the problems initially that you faced that you had to solve that have led to where you are today?
I mean, the first ones that I initially had to solve, and I think company-wide, is really getting the right people in place, right? And as you scale, and I've described this before, as you scale, we bought properties, and okay, great, we're just focused on this one property, and we can buy another property, we're focused on this property, and then we buy another property, and then it turns into 7 properties, and now it's a lot more work for all of us. And now what kind of management key personnel do we need to put in place? What kind of structure and what kind of processes do we need to put in place? Because then your problems start to become uniform, right? And so then it's, hey, instead of just solving this problem at Park A, it also in Park like Z, we need to do the same things. And so how do we create processes so that we can create less work? So the scaling was really difficult at first because we had key personnel doing multiple different job tasks, which at the end of the day is not good for morale, right, when they don't know exactly what their job description is. And so putting all those processes in place. And then initially as well, having to learn a whole new skill set of raising money and all reading. For me, because I had to do that, I had to read the whole PPM documents, and I'm not a lawyer, right? And so all the questions I had to ask to the lawyer, what is this? And I had an investor ask this question. So it was really kind of like, let's figure it out as we go, but having the true commitment to that, always doing right and making the PPM documents right for our investors and right for what we're trying to create as well too. So
why mobile homes? How did you? Yeah, let's unpack that. What do you love about mobile homes?
Okay, so first of all, I think in commercial real estate, it is one of the last remaining opportunities where you're buying from true mom and pops. I do know that actually in self-storage and some RV parks, you can buy from some mom and pops, but we're still really buying from true operators who have owned these things in their family for 20 plus years, really bad at operations, scared to raise the rents. So we're finding that mobile home parks is the fastest way for us to churn the velocity of our capital, because my investment thesis is essentially like real life monopoly. If you fundamentally believe that the government's always going to keep printing money, well, then you have to agree that your inflation is going to keep happening and assets are going to keep appreciating. And so with that theory in mind, you want to get your hand on as many good assets as fast as possible that are going to keep paying for itself. And I found that in multifamily, the only really way to do that, to recoup all of your money, is to sell a property, but then you're beholden to the 1031. Now, but with mobile home parks, I can go in there, I can keep this property within 5 years, get all of 100% of my capital back because there's so much equity still to be made in there. Now, granted, there's more problems you have to solve on the ground level, on the property level, and it's a lot more nuanced than multifamily is. But I always feel like the more problems you solve, the more you get rewarded. So there's that. Secondly, I'm a cash flow investor. I love passive income, right? That's all I think about is like the net passive income that's coming in. I love cash flow. Mobile home parks clearly has more passive income coming in than multifamily, easily by a long shot, and I'd argue with anyone on that. And generally speaking. Secondly, it's non-transitory. Multifamily is very transitory. You have people coming in and out all the time. With mobile home parks, even though the word mobile is in there, in actuality, we have maybe throughout our whole 2,000 plus portfolio, maybe one move out per year, maybe two on a bad year.
Really?
Oh yeah. No one moves out, right? No one moves their home away from our parks, right? It doesn't happen in practice. It has the lowest delinquency rates in mortgages of all commercial real estate. It also has the lowest, incredibly low delinquency rates when it comes to the tenants on their mortgages for their homes, right? So this is, and there's more. The demand for mobile home parks is what's surprised me the most when I first got into the industry.
Well, we have an affordability problem here.
And there's no good solution right now. And I truly, as someone asked me this earlier, yesterday, I hope it gets solved, but I don't see anything foresee happening. It's the government at the end of the day that has to come subsidize it, or tech, and we're probably at least 10 years out from there. Easily. So we have a supply and demand issue. Supply is dwindling, and demand is increasing for low-income housing. This is a market trend I want to ride, and if I can get ahead of a market trend, I'm going to do it, and that's what we're in the middle of right now.
I love that thesis. It makes a ton of sense to me. Have you ever read the book, Am I Being Too Subtle? By Sam Zell?
No, I haven't.
You should go read that book, right?
Okay.
So, are you familiar with Sam Zell?
Of course.
Okay. So he wrote a book, and he went into mobile home parks, RV parks, like early.
Oh yeah, I know.
Early.
He's a legend.
He's a legend, and just everybody in Wall Street was laughing at him, like, "Why would you do this?" And he's like, "Watch, right?" And he rolled up a ton of
I know.
across the country.
I know. It's same with Warren Buffett. You know, he essentially controls the whole mobile home community market.
I had no idea.
Yeah, he's the biggest manufacturer of mobile homes. It has True Homes. He has Clayton Homes are the biggest producers of mobile homes, and then he's the biggest lender for tenants to buy their mobile homes by the 21st program. So he essentially owns the whole mobile home industry. Yeah.
Wow.
So there's that.
Of course,
100%. Like, duh. You know, and then he also insures the insurance companies that are just jacking up insurance rates on us too. He's winning. So I respect him. I get it. And so the last thing I really wanted to press here is I heard about all these things. Okay, it's a lot of work. But the thing that really, I already knew I was going to do it, really pushed me over the edge for it, is that we get double the depreciation than any other sector. Like in multifamily, typically you could depreciate about 35% of the purchase price. Now it's lower because of the rules. But in mobile home parks, because our depreciation schedule is on a 15-year instead of a 30-year, we get double the depreciation. And so 5 years ago, I was getting, more than my down payment on mobile home parks as a depreciation in year one. And I can write that off against my ordinary income. So it became just a no-brainer in all of these facets for me. So that's why mobile home parks.
I'm curious, what are the operating cost? Kind of like, what's your target operating cost on a mobile home park? Like, is it 30%, 40%? Like,
yeah, good question. So we underwrite to 35% on all of our deals. We have routinely been able to get it underneath 30% and typically to that 25, 30%. Now, there's a lot of variance there. If a park has a septic system or a lagoon system, it's going to be more. How much landscaping does that have? But generally speaking, we write to it a stabilized 35%, but our average is about 28%.
What's the sweet spot for you in terms of the number of mobile home sites that you want?
You know, honestly, I don't really have a sweet spot. My sweet spot is how much equity can we build into that property? We're minimum 50. We typically go up to about 110, 150. We're about to buy a 300 lot here soon. We're closing in a few weeks. I think the sweet spot for us is that 80 to 100. Right there. I think that's like it's like perfect for amount of scalability, diversification in terms of like a de-riskment if there's a mass exodus, which has happened to us before. So I think that's our sweet spot. But we find that the most equity to be built are in the 50 to 70 lots. So
What do you use for kind of like a tech stack to run the business? Like, is there a special mobile home software that does a lot of the
yeah.
accounting, or do you just do QuickBooks, or like is there?
Yeah. So first we use Rent Manager as our software. It's really robust. And I'm very proud of it, just integrated all of our systems. And we essentially have two companies in one, right? We have the investment side and we have the property management side. And we created a program, or not created a program, we integrated all of our systems onto a system called Coda, where it's like an online Wikipedia for us. It's like a SOP. It has all of our tasks and property management inside of there. And we're able to talk to everybody. So it's eliminated about 50 to 70% of our emails. And me personally as a CEO, I can go and see how every property is doing in real time because it's integrated with Rent Manager. It's an incredible system, super robust. So that's been amazing. And then, obviously we have an accountant, and then Syndication Pro is also what we use for our investor portal as well too.
What would you say is the biggest challenge when running a mobile home park, just from a management perspective? Is just dealing with, it's a management company. Like, we own a management company, but we don't own a mobile home management company. So I'm like, okay, what are the things that like I should know if I was a manager managing a mobile home park that it probably is different than traditional property management?
I think it's first of all allocating the resources into the right things at the mobile home and how to enhance the curbside appeal of it. I think a lot of property managers, and I don't want to generalize, but this is kind of our experience, they forget to take care of the tenants, and because of that you'll be able to achieve a lot higher rent once you do all the capex. We are definitely not that company, and we actually adamantly are against the companies that go in and raise the rents 100% in day one just because they can. But I think it's doing all the right things and justifying your rental increases. And then secondly, it's dealing with some of the tenants. I mean, we are dealing with workforce housing, and every park we buy, there will be some troubled tenants. There will be some, just bad tenants. I don't want to say anything or generalize it. There's bad tenants that you have to kick out and you have to deal with, and you have to understand what to look for, what not to look for, and be able to enforce your rules on them, to clean up the park. And there's a lot of pushback for sure, right? And it's definitely not for the faint of heart. But with that, once it's stabilized, we have a flood of tenants saying, thank you so much. They were troubled tenants. You cleaned up the park, because they own the home at the end of the day, right? And then also to be pushing home ownership as well too. That's a big thing, right? So mobile home parks are interesting because in the beginning, in the first few years, it's a lot of work. I mean, it is a lot of work. But then once it's stabilized, you don't have to do too much, because now every home is owned by the tenant. You've already done all the roads and you've done all the infrastructure, and then it just cash flows thereafter, right? So,
And do any of your parks, and maybe this is just maybe this is just RV parks, but do any of your parks have like swimming pools or clubhouses, or do you try to stay away from all that stuff?
it's not that we try to stay away from that. It's that where we finding our equity to being built is typically not those deals. Those bigger deals that have pools and clubhouses are typically the ones that are in bigger cities and bigger metros, and institutional money has already grabbed them. So we stay away from that just because we can't make the equity multiples that we want to make on them. So it's not that we wouldn't buy one. It's just that we haven't found one that makes sense for us.
That makes a lot. That makes a lot of sense to me. And you don't own any in Las Vegas?
No, we don't own any in Las Vegas.
Do you have to worry about? I guess a lot of the ones that you do are in the Midwest. You said, but have you ever looked at Florida? Like, does weather factor into any of this stuff?
Yes.
Owning a mobile home. So let's talk.
For sure. Okay. So in Alabama, we don't buy in the south region of Alabama. We only buy in the north region of Alabama, just because of hurricanes and flooding and insurance costs. And it's also a really big fear of all of our investors too. That's the number one question that I get asked all the time is, what's the biggest risk? What if a hurricane comes in and whatnot? So yes, it's always a concern, but then I think maybe from my poker background, I just, try to mention very kindly that statistically speaking, that I know it's a big sizzle item we hear on the news, but statistically speaking, it rarely ever happens, if that. And then if so, we have loss of income insurance placed on our properties. And so it's not a concern of mine whatsoever.
Okay. Let's change tracks, talk tracks
Sure.
real fast. And let's talk a little bit about emotional intelligence. You kind of touched on that a little bit prior to our conversation. How does emotional intelligence factor into what you do currently?
So I think it's, this is kind of a loaded question just because I always give one example when talking about emotional intelligence. Even as an adult, it's really interesting because the best example I ever give is that let's say you're in a setting, and let's say you're in any setting, a conference room, a seminar, anything. And whoever's speaking is saying, hey, raise your hand if you have the right answer, or raise your hand on this thing. Typically, as an adult, we don't raise our hand because if we don't have the right answer, we don't want to say the wrong answer. But who's making that decision? That decision is being made by a 5-year-old child who went to school, who raised their hand, who had the wrong answer, where the kids laughed at them, and you made an emotional decision when you were 5 years old. I'm never going to raise my hand unless I have the right answer, and I know for a fact I have the right answer, right? We've just reinforced that pattern for 30 years, 40 years. So who's really making that decision? A 5-year-old child is making that decision, right? Not the adult version of us. So emotional intelligence is about checking in with yourself and understanding why you're doing what you're doing. Okay. And when it comes to business, I think at the easiest, lowest hanging fruit, as I could say, is that from my poker background, anytime you make an emotional decision, you're making a wrong emotional decision when it comes to money and investing. Emotions should be left for family. They should be left for friends. They should be felt for that. But when it comes to business, emotion should not be in it. Oh, and also emotions should be part of your ecosystem and your culture and people. But when making business decisions, you've got to get rid of all the emotions and you got to think logically. Some people I see fall into the trap of wanting to buy a deal or having to buy a deal or just wanting to be like, oh, I'm going to get a deal. I think that is the absolutely wrong way to do it. So that's on the investment side. Emotional intelligence also will help you. As a CEO, I have one job, right? This is kind of what I say, it's my spiel. I have one job as a CEO, to find the right people and then empower them to do their job well. And I try to tell all my employees that you are actually my boss. When you actually understand what I do, you're actually my boss. To be able to fuse, now it's my job to be able to fuse different personalities with different personalities, all humming the same way in the same vision. And so my emotional intelligence has really come into place because I think one of the things that I do excel at is recruiting and finding the right people to fit the ecosystem, to fit the culture, to fit the department head on exactly what we're looking for. I think I've been incredibly blessed with amazing partners, amazing employees who have a great attitude and who are the hardest working bunch I've ever seen in my life. So that's a little bit, two different scenarios of where emotional intelligence comes in play.
So, curious if you test for that, meaning are you like when people come into your world, are you having them take the DISC tests or strength finders, or do you naturally, through playing poker and life and, just have a sense? Or is it science? Is it science and sense for you?
It's science and sense for me. I've obviously read all the books that I can on this because I've realized that I'm not good enough to do what everyone else does. Actually, that's something that Bill Perkins told me. And I remember him looking at me. He's like, Pasha, you're an idiot if you think out of the 8 billion people in this world, no one could do your job better than you. So fire yourself as fast as possible. I took that to heart. And so it's a little bit of both. I 100% do a disc profile, but I do an intermetrics disc profile where it gets a little bit more granular on the disc profile itself. And what I do is, let's say I have a position. I build out a mental model of what I want the disc profile to be. Okay. Once I do that, that's my first filtering system. The next filtering system is I do a quick 30-minute interview with everybody just to make sure that the culture fit is correct, because culture fit is incredibly important for me. After that, I'll do a second interview, and what I do is I have my own metrics that I created in there's 5 different attributes that I'm looking for in a candidate. And within those 5 different attributes, I have a ranking system of where they need to be at a minimum threshold for me to hire them. And within each of those categories, I ask about 6 to 7 open-ended questions. And so while I do that, I'm trying to always gauge what they're going to say and I'm moving them up and down the slide mentally to where it is. Once I do that as well too, when I'm going through the interview process, because I do know that it's a first interview and everyone is trying to put on the best face forward, I look for patterns, right? Because when you understand human nature, you understand that patterns will always come out, kind of like what I spoke about before. And that's what we did in poker too. All I had to do is figure out your pattern of how you bet, what you did on the turn, what you do on the river. Are you conservative? Are you aggressive, loose? I just do a mental model. Once I do that, I look for the patterns, and then I say, okay, well, if one candidate has repeatedly said, like work overtime or whatever they end up telling you, you can with good confidence say like, okay, this person is probably going to get the job done, right? Mm-hmm. Mm-hmm. And so I look for patterns by asking the same questions in a different way in open-ended questions over and over again. And then I take a mental note of those. And then I sit on it for about a day, and then they'll pass another one. Then I'll introduce them to my department head or a partner, whoever they're going to work with. It's just a lot more too. And obviously I need to, let's say, one last tidbit, like, in my acquisitions department, I know that my partner and our acquisitions lead are perfectionists. They are OCD about making sure every number is perfect. I can't hire someone who's not a perfectionist as well too. So that's the pattern I'm looking for. So I make a lot of mental models and then try to aggregate it all. Sorry, that was long-winded.
No, I love that. The reason why I love it is because you've thought it through and you have a system associated with it. I'm curious, what are your 5 things, the 5 attributes, right? Is it hungry, humble, smart, like
some of those, yeah.
Yeah, because it is incredibly valuable just to have a system of evaluation that you can repeat over and over and over again. And
yeah.
And success leaves clues, right? So
that's 100% sure. Yeah. So mine are humble. Humble meaning, are they going to be able to admit when they're wrong and ask for help? We need someone that is in that. And then are they like a good team player, constructive feedback, and are they authentic? And then I say they must be a 6 or above on that. Smart. Are they emotionally intelligent to be empathetic towards others? Smart is not intelligence IQ. And smart to me is how can you handle situations with grace and being people forward. Then I'll do they want it? That they must rank 6, and then if they want it, it has to rank an 8 or above. Are they hungry for it? Have they demonstrated that they're fighting for this position? Right? That has to be an 8 or above. The people who are just lackadaisical, those are the ones that end up leaving you. And then do they get it, which is a 5, because I could teach get it, but they have to have an understanding of what they're getting themselves into at a core level. And then can they execute? And I put, this is not scientific. Can they get shit done? Will they deliver results? And can I feel like I can unleash them is really some of the things I look for. And that has to rank an 8 or above. If they don't hit any of these attributes in the way I want them to, it's not going to work. If they don't fit the disc profile, it's not going to work, right? So I'm going to find the right person and just let them go. And then my job is just to check in with them every single week. Hey, how are you doing? How can I make your job better? You tell me.
It goes back to the whole adage of, hire slow, fire fast.
Yes.
But a lot of times people don't understand what hiring slow actually means. It's being thoughtful and having a scorecard for these attributes that you've designed. Everybody can kind of design their own within their business based on the personality of their business, and then ranking people against that. Like I could see your statistics coming out. I could see your scoreboard coming out.
Yeah.
It's like, hey, if they don't fit my buy box, right, I'm not going to hire them.
That's correct.
Right. So you've got a buy box for people, and you've got a buy box for your mobile home. Interesting.
Yeah. And something that I've learned running this company now is that I'm always going to be proactive instead of reactive. We scaled at one point so quickly that we were in reaction and recruiting. Mm-hmm. And so we just hired really kind of anyone that almost fit the criteria, and they never worked out. And so now I have a map out of what we're going to be doing in the next 6 months, 12 months, 24 months, and then I'm recruiting 6 months ahead of time.
So let's kind of go there real fast. Where do you see this going? Now that this is kind of like a new business for you. When you think about it, you've got all these years experience, but Evoke Capital is, started in 2021,
yep.
right? And so where do you want to take this 2031, 2041, right?
Yeah, so the great thing about my company right now is, and I have amazing partners because they let me keep investing on infrastructure. I really feel like the hardest part is past us because now we have all our systems and all our processes. We have everything is cleaned and organized. Now we just have to execute at this point, right? And put the right people in place and whatnot. I don't do anything small, Rob. So Evoke Capital will become a top 10 holder of mobile home parks within the next 10 years. Like easily, you could bet on it. My vision is so big, and I won't stop till I get it. And really, go ahead.
I was just going to say that the infrastructure piece is a piece that people don't quite fully understand, right? Like most self-employed people never build that infrastructure piece. There's just like operating kind of like in this entrepreneurial world. It's hard and it's expensive to build the infrastructure piece.
Yes, it is.
And once you have it, it is the heart of the business, and you can just kind of like scale it. It takes a long time to build. I mean, you built it relatively fast, and of course, you're gonna build it. You'll get the 10,000. You'll have to break it. You'll have to rebuild it, right? Like as you
That's
get
correct.
bigger, right? You're gonna, but at least you have a direction, a focus, a basic framework for it, and it took me 5 years to build that easily.
Yeah. The way I look at everything, and for example, a few months back, we hired a key personnel for something, and I remember telling my partners, hey, if this person doesn't work out, that's okay. You know why? Because we just figured out what we don't need in this position. And for me, everything is just data. Nothing really bothers me, right? And when problems do arise, it's just, okay, how do we figure it out, right? We had a consultant who went 95% of the way and didn't finish that 5% and kind of left us kind of hanging on something. I was like, all right, that's how you want to do business? That's fine. We'll figure it out. But that's kind of the poker mentality. And I agree with you because things will have to change and things will have to break again. If they're not breaking, we're complacent, in my opinion, right? And that sounds cliche, but it's really true. I have this like mental image of where my vision is. And what I always tell people is once you have a crystal clear vision, everyone talks about vision, but it's super important. I let that crystal clear vision pull me into who I need to become for that person, and then let the results catch up, right? So, and I believe in coaching. I have 2 incredible mentors who have built billion-dollar businesses who I get regular coaching from, right? Because I know that I don't know all that much. But what I do know is that I read every book that I can, I listen to every podcast that I can, and I have mentors that are guiding me. And then typically, every problem that I'm solving has been solved before many times. And it's in all of these books. So the information is out there, but that goes back to my original theory, my first initial pillar of entrepreneurship is just education. Always keep educating yourself.
I 100% agree. And what's so fascinating, and I probably should have started off with this question, but I'm going to go back. This is coming from a guy that didn't finish school.
No, I dropped out pretty quickly.
So let's talk about that, right? Like, why, how, like, what is the psychology around all of that, and or life circumstances around?
Sure.
I'm just curious because that's
I'll get a little vulnerable on this because it's such a big part of my story. Growing up, I was incredibly depressed. I think that gets tossed around way too much now. I was suicidal at times of my life. I've almost done something bad to myself. So when I was going through college, being depressed and trying to pull myself out of it, I just remember I'm not going to do this. I made a promise to myself. I am not going to do anything I don't want to do. And when I was in college, because of the way my brain works, I do have ADD, and it's very hard for me to focus and sit down and retain information now I know how to swim with my mind a lot more. But back then it was torturous. It was honestly torturous in these classes that I was just sitting there because I could pick up concepts really quickly. I could test very well. The teacher would say something, I would just be like, okay, I get it. Can we move on? But then it's like it drones on and on. And I just made a commitment to myself, and I still do, is that I never settle for anything that I don't want to do. Mm-hmm. So I just knew that this wasn't for me, and I'll figure it out. And my whole life has just been me figuring it out. Whatever it is, I'll just figure it out. And that's the mentality I've taken with me. Same with this company, same with my life and what I've created in my life personally and professionally.
I heard somebody the other day say, if it's not a hell yes, it's a hell no.
That's a great way to look at it.
Right.
Yeah.
And I'm only going to focus on the hell yes, and then you haven't figured out. Here's what I want people to hear. You haven't figured it out on your own. You've sought out mentors that have figured out the shit that you want to figure out. Right. Like.
Oh yeah.
People. You're like, hey, what? I'm not going to reinvent the wheel. People have already done this. All I got to do is go in and tap into wisdom, which is what's great about podcasts, what's great about books, right? And so you're going to be coming out with a book. It's probably way too premature. Listen, when you do come out with a book, I want to have you back. Right?
That'd be great. All right, I would love to.
I want to be able to have you back. I'm curious. We touched on this a little bit, and this will be kind of like the final question.
Okay.
Die with Zero, right?
Yeah.
The book Die with Zero. Like, when you read that, yeah, what
chills.
did you get from
I already got chills. So, just a little backstory. Bill Perkins is an incredible friend of mine. Like I was telling you before, we went through a leadership program. So he has aggressively been giving me feedback for 13 years. When I say aggressive, I mean aggressive. Like, this guy is relentless. And when he has an idea, he will tell you exactly what it is. And one of the biggest things, and I'll pertain this to Die with Zero, is that one time I was making fun of him because he had 3 different assistants. And he just looked at me dead straight in the eyes, and he goes, Pasha, you're making fun of me because you don't value your time. And it didn't hit me then. And I just said, I don't know what the hell he's talking about. But then it hit me later on when I got my first assistant. I said, oh my gosh, I was undervaluing my time for so long, right? Because I was in that mindset that I had to grind it out. I had to do everything. So Die with Zero is this beautifully well-written book about this, essentially the algorithm to your time and money expenditures, and when it is best to spend your money, and when it is to make your money, and how to spend energy. So it breaks down energy, it breaks down money as time. And the biggest thing that it took for me is that at the end of the day, you have to confront, and I don't mean to get morbid, that you're going to all die one day. Mm-hmm. We're all just going to pass away one day. We're just lucky to live this 100 years, 120 years, whatever you believe in, on this rock that has been floating around for billions of years, and we're just lucky to be here. So when you can accept that, you can start understanding that as much as I love to build and create and do business, life and experiences mean more, because at the end of the day, when I'm on my deathbed, the experiences will come to my mind. Mm-hmm. Not the hours I spent 9 to 5, working on some document to give out to that. So it's having that balance and also understanding what to prioritize in certain times of your life. It changed my whole paradigm on spending money, not being so frugal with my money, to getting out and experiencing life and spending money on the things that I want to spend money on. Like, why do we work so hard and then try to hoard on to it? So, and then now that I have a family and newborn twins, how do I give them experiences in different culture and how do I live that life with them? So it's one of the books that changed my paradigms. You know, there's only a few books that have done that for me, but that it's been an incredible book.
Yeah, I remember my former business partner, best friend. I owned a recruiting business with him for 7 years. He read that book, and it was like, he was like, dude, this book just changed my life.
Yeah.
Like, it
That's
changed
good
my
to
life.
hear.
It changed my whole outlook of what I'm doing, what I'm building. Because, you know, we were like, invest every dollar. Like, you know, it's just more this psychology, more than you realize. Dude, we're freaking gonna die, and like the only thing we're gonna remember are just the experiences that we have and the people that we love and how we've left, you know, people feeling along the way. And so
Yeah.
we need to recalibrate that, and it was super eye opening. So,
Yeah, it's pretty amazing.
well, listen, Pasha, thank you for sharing your time.
Thank
Because
you, Rob.
you know,
Appreciate
thank
it.
you for sharing your time with us today. I know I've taken a lot from this. You've impacted me. I'm sure you will impact our community. I really appreciate it, man. Thanks so much.
Thank you. I really enjoyed it. Yeah, great.
Cool.
Great job.
Thanks, man.